Bloomberg Tech is live from coast to coast with Caroline Hyde in New York and Ed Ludlow in San Francisco.
This is Bloomberg Tech. I'm Matt Miller in New York, filling in for Caroline and Ed, who are on assignment today. Coming up, Nvidia invests $2 billion in Marvell to collaborate on silicon photonics technology. We have the details of that deal. Plus, the debt binge fueling the AI boom continues, with CoreWeave raising $8.5 billion more from banks and investors to expand its neo-cloud capacity. And wearable health tech company Whoop gets a $10.1 billion valuation after its latest raise. We'll sit down with the CEO. But first, let's take a look at what's going on in markets, because we have a rally on our hands today. The S&P 500 gaining 1.5%. The NASDAQ gaining 1.25% right now. It is worth pointing out that even adding 290 points only brings us back to 23,245. So we're rising up, but still to a relatively low level. And Brent crude trading at over $107 a barrel right now, 107.71. NYMEX is trading at $103 a barrel. So even WTI well over that $100 level, as the president tells aides, at least according to the Wall Street Journal, that he is thinking about leaving Iran without reopening the Strait of Hormuz. Let's bring in Bloomberg Balance of Power co-host Kayleigh Lyons for the latest on the war in the Middle East. Kayleigh, what do we know?
Well, Matt, it does seem to be a narrative that is changing each and every day. At this time yesterday, we were talking about President Trump, who was openly threatening publicly on Truth Social to potentially attack Iranian energy infrastructure, even water infrastructure like desalination plants, if Iran did not reach a deal with the United States to reopen the Strait of Hormuz. Then you have fresh reporting in the Wall Street Journal that he has privately told aides around him, according to people familiar with the matter, that he would be willing to wrap up the primary military and naval operations right now, like destroying the Iranian Navy and other military targets, without actually securing the reopening of the strait, leaving that either to diplomacy or potentially for other countries to step in to try to secure. And that would be in keeping with what we're hearing from the president on Truth Social this morning, specifically when it pertains to jet fuel. He talks about other countries, including the United Kingdom, who need jet fuel and aren't getting it right now out of the Middle East, that he would suggest either, number one, you buy that from the United States. He argues that we have plenty of jet fuel, or you go into the strait yourself to try to secure it. He actually said, and this is a quote, "Go get your own oil." So it does seem to be building on this narrative of the president, which we have been hearing for weeks now, pushing other countries to step in more acutely in the Middle East, either to secure the Strait of Hormuz or otherwise support U.S. operations that do still remain ongoing when it comes to Iran. Of course, we've had thousands of more American military personnel, service members arriving in the theater over just the last several days. We heard once again from the Defense Secretary Pete Hegseth and the Joint Chiefs of Staff Chair Dan Kane about ongoing military operations, some 11,000 targets still struck. And Pete Hegseth did echo the president in saying more could be targeted if indeed no deal is reached, Matt.
All right, Kayleigh, thanks very much. Look forward to your program. Kayleigh Lyons co-anchors Balance of Power at 1 o'clock on Bloomberg Television. Let's turn now to the big news in chip makers today, with Nvidia announcing a $2 billion investment in Marvell technology. It's part of a strategic partnership that will connect Marvell with Nvidia's AI ecosystem, essentially opening up the tent to bring in more players. Let's get to Bloomberg's global executive tech editor, Peter Elstrom. So, Peter, what do we know about this deal?
Hi, so we've seen Nvidia cut a number of these deals in the past where they're going out and they're working with other technology companies to try to speed up and improve the AI infrastructure that they're building out around the world. They're, of course, selling their chips to the AI developers. And in this case, they're partnering with Marvell, investing $2 billion, as you say, not a small amount, to be able to get more access to their technology, especially the photonics technology that they need to be able to connect chips. Nvidia, of course, has the best AI accelerators on the market, but increasingly they want to be able to connect those chips. So it's not just one GPU, but dozens of them, or even scores of them, hundreds of them, to be able to work together to power these data centers more efficiently. Marvell has excellent technology for that kind of networking. They want to be able to use the photonics technology that they've been accumulating and developing over the years to speed up that process and also to make it more energy efficient. As we've seen, data centers consume a tremendous amount of power, and if you can reduce that requirement even a little bit, you're going to save yourself some money and some costs.
In terms of NVIDIA's power, we really saw it put to work with a property developer that got, what, $3.8 billion in funding, even though nobody has really worked with them before. What's the story there?
Yeah, this is a fascinating deal, and you see the creative financing that is popping up around a lot of these AI development infrastructures. You're talking about Track Capital. It was started by an entrepreneur, Grant Van Rooyen, who's done data centers before. Certainly they've done them, but in this particular case, you're exactly right. Tract has a deal with Nvidia where they promise they're going to buy data center capacity in the future. There's no revenue from this company at this point, but Track has set this up as a subsidiary, so it's not guaranteeing the $3.8 billion in debt that you're referring to, but it's really a bet that they're going to be able to construct a data center, get power connected to that data center, and begin to sell AI services in the future. We'll see if it works, but there's a lot of this kind of speculative financing going on to try to support what's a very fast build out of these data centers. So it'll be a fascinating deal to watch.
Yeah, just having Nvidia on your client list, the name there is enough to get you pretty good credit. Peter Elstrom, thanks very much for that. Let's talk about one of the other chip makers that we're watching today, and that is Supermicro, the company facing growing investor concern after a string of self-inflicted setbacks. Most recently, its co-founder was indicted on charges of circumventing U.S. export restrictions to China. For more on the stock, Bloomberg Tech Equities reporter Ryan Vlastelica joins us. And Ryan, it just looks like investors are leaving this company again in droves.
Yeah, absolutely. Thank you for having me. So absolutely, having the indictment of the co-founder, that's obviously a pretty big hurdle for any kind of investor, but this comes after some other major red flags at the company, notably some accounting issues over a couple of years. This has something that people are extremely cautious about, even though the company is very well positioned in what is seen as a major growth market, which is AI servers. So we've seen the stock really fall precipitously over the past couple of years as people sort of assess what does this company's risk profile look like, what kind of governance issues are coming into play here. All of that at the moment is really overshadowing a more positive fundamental growth story in terms of the market it's operating in.
In terms of, it's not a chip maker, obviously, Supermicro. What is the main product for this? Is it server racks?
Yeah, exactly. So AI servers, another company, Dell is also involved here, Hewlett-Packard Enterprise. Not many companies operate in this, but it is a key part of AI-related infrastructure, which is why the company for a really long time was doing quite well. It was seeing pretty dramatic growth. It is one of Nvidia's major customers, and we saw the stock sort of react to that. I think at one point it was the biggest ever component of a small cap index before it was finally moved into the S&P 500, just as a reflection of how quickly the company was growing and how much the stock was rising. Now, all of this is really coming under question right now. So while there's still a lot of optimism about the long-term story of AI infrastructure, here you have a company that has a lot of really unique challenges and risks associated with it, especially relative to more familiar companies like Dell or HPE.
All right, Ryan, great to get your coverage. Ryan Vlastelica covers tech companies for us out of the middle of America. Coming up, CoreWeave shares are rising this morning as the NeoCloud company raises an $8.5 billion loan to help fuel its complete build out. We'll have details on the NeoCloud operator next. This is Bloomberg Tech. Let's take a look at Snap. Why don't we? Shares are jumping on the news that activist investor Seronic Capital Management has built a position in the company. Sources saying Seronic is pushing for changes to improve financial and operating performance. Bloomberg's Leanna Baker joins us now. She runs the deals team for us here at Bloomberg. So what do we know about this investor and what it wants out of Snap?
Sure. So we've seen Seronic before. They're an up-and-coming activist. They've gone after companies like News Corp before, owned by the Murdochs. So they're no stranger to companies that are controlled. But here, they're looking at sort of shaking up things at Snap. You know, the stock is down 50% year over year. They're asking for a lot of changes from, you know, a stock buyback to more adoption of AI to big layoffs and just other things that Snap should do to sort of get back on track. Since going public in 2017, its products are wildly successful, but it hasn't really found its footing as a public company. Just the share story doesn't tell that. So yeah,
I mean, I'm looking at this is a company that's only worth $7.2 $1.4 billion, right? Up against a Meta, which is worth $1.4 trillion. And you cite the year-over-year performance, but over 5 years, Snap shares are down 91%. I mean, they've lost essentially all of their value.
It's stunning. And here comes an activist investor saying, look, we believe in the business, but here are some changes that we think that Snap can make to sort of have its second act. They're looking for a comeback here, and they believe that, with the right moves, maybe shutting down the Specs wearable business, that's one thing they're calling for, that, Snap could turn itself around.
That business is still operating?
So the company had announced earlier this year they're separating it into a standalone entity, but we're waiting for the glasses to come out later this year.
All right, tough to go up against Meta with that business as well. Thank you so much, Leanna Baker, on that. Let's get to the NeoCloud story now, because CoreWeave has raised another $8.5 billion to expand its cloud capacity as the debt binge fueling the AI boom continues. Shares of CoreWeave climbing on the news. The loan is backed by a combination of semiconductors and a customer contract to use those chips. Bloomberg reported last month that the deal was with Meta. Let's get more details with our markets reporter, Bailey Lipschultz. So, Bailey, what do we know about this stock and its incredible, borrowing performance?
Yeah, Matt, this is probably the most debated stock on Wall Street, maybe behind Tesla. And when you look at kind of that debt binge, they have been clearly tapping every avenue or venue that they can, and they really, according to the company, this is the largest chip-backed product in terms of borrowing. So when you put this into an SPV, you're using, again, to your point, about $8.5 billion of borrowing power. That is going to go into funding and building out the operations, as you mentioned, backed by that Meta contract. So this is a company that, if you talk to the bulls, they're being very novel with different ways to fund these build-outs and fund these operations. If you talk to some of the skeptics, this is just another move to borrow money and use the name of Meta to help back that up.
So I look at, again, the market cap here, it's a $40 billion company, but they have $23 billion in debt on the DDIS page, and I assume that's not including something like this because, as you said, it's an SPV.
Yeah, the structures are interesting, and when you talk to investors, if you're talking to private debt buyers, they love this because, okay, you're actually backing an individual product that is investment grade according to Moody's, that is backed by a contract with Meta. If you talk to equity investors on the public side, to your point, it's a bit more of a complex picture, and that's why we've seen elevated short interest. We've seen wild swings with this stock going back to when it went public last year during, call it the tariff issues. And really, when you look at kind of the under the surface performance of this company, it is betting that they are going to dominate the space of acquiring Nvidia chips, building out those data centers, and helping lease compute to hyperscalers. It's a bold strategy that so far, again, we're really only in the early innings of that story playing out.
Yeah, I mean, this is a stock that has doubled in the past 12 months, Bailey, and almost all of that came in the first couple of months after Liberation Day. Since then, the stock has been on a steady decline, so the chart doesn't look as impressive as it sounds.
No, not as impressive as it sounds, and if you compare its one-year performance to its main publicly traded peer, and that's Nebius, it's actually underperforming the other NeoCloud rival. Again, this is a story that, from an investing standpoint, has so many different parties participating. So yes, you look at the stock performance. Again, that's only the public equity side of this story. So even when you talk to, as I do, investors who operate in both the private and public space, it's a bit more of a complex and, again, debated story from a public equity perspective. But we continue to see the company finding willing investors to help back its credit and willing consumers in the likes of a Meta to sign some of these contracts because there are trillions of dollars at risk.
Yeah, CoreWeave shares up 98.5% in the past 12 months. Nebius up 360%. Bloomberg's Bailey Lipschultz covers the markets for us. Coming up, autonomous boat startup Seronic raises $1.75 billion as the wave of funding into defense tech continues. More on that next. This is Bloomberg Tech.
A lot of our peers just don't focus on this area because it is too complicated. Those that we do compete against tend to be more mid-market firms, which, as a global private equity firm with our global footprint, with the resources we have, it's easier for us to differentiate when we're looking to court a founder of a business that he should partner with us.
That was Ian Fujiyama, head of Aerospace, Defense, and Government Services at Carlyle, on navigating regulatory landscapes. Sources tell Bloomberg Carlyle is reaching out to investors about a potential defense-focused fund. Carlyle representative declined to comment, but we want to get more on this report with Bloomberg's private equity reporter, Allison McNeely. She joins me here on set in Studio 1 at 7:31. Allison, great to have you on the program. This is really about more than defense, right? It's about at least what we think we know, Carlyle investing in kind of rebuilding the industrial base.
Exactly. It's sort of being pitched as a defense and a reindustrialization fund. And that actually has a lot of connectivity with defense in general, right? We've seen the U.S. Army, they have this big push for $150 billion in capital to invest in infrastructure. We saw that they, entered into exclusivity to negotiate with KKR and Carlyle on data centers last week. So this has really been an emerging theme of private capital kind of coalescing around defense and industrialization.
Private capital getting into it big, but Carlyle specifically has deep roots in defense. What's different about this go-around?
What is different about this go-around is we sort of, in the past, defense, as I understand it, has been somewhat boom and bust or wax and wane, depending on really who's in the government and what kind of push there is to invest in defense. But given sort of the changing environment that we saw really starting with Ukraine a few years ago and now kind of what is happening here, there's a realization among governments around the world that they need to invest in their defense, invest in their military, and do technological upgrades as well as sort of, again, that infrastructure upgrade.
All right, makes a lot of sense. Looking forward to more reporting on this story. Allison McNeely, thanks for joining us. Let's stick with the defense or reindustrialization theme, because Seronic is making military drone boats. It's closed a $1.75 billion Series D round, valuing the company at $9.25 billion. And we have the CEO for you. Dino Mavroukas joins us. And Dino, for you also, this must be good news, the Carlyle story, right? Obviously, your funding round has been very successful. What are you going to deploy that capital to do? How will you rebuild the industrial base?
Yeah. Hi, Matt, and thanks for having me on the show. This is very exciting news for Seronic, and as you mentioned, very exciting news for the industrial base. Before I jump into what's next for Seronic and what we're going to be doing, it's important to acknowledge that this fundraising really came off the back of, or is a byproduct of the execution of our team over the last 12 months. Like, just 12 months ago, we raised a $600 million financing round on a $4 billion valuation. That let us open our first shipyard, launch Marauder, which is a 180-foot autonomous ship, start a $300 million infrastructure project into scaling production capacity at that shipyard, and also scale the production of our small USV products, Corsair, which you see right behind me, well into the thousands. Now, as we look forward, what are we going to do with this new capital? We're going to continue to accelerate the production and the delivery of our vessels to the U.S. and allies around the world. We're going to launch new products, new ships, and we're going to continue that investment into the shipbuilding industrial base, invest billions of dollars, create thousands of jobs in the process, and unlock production rates in shipbuilding that we haven't seen in this country since World War II, and do it in a very software-first, technological-first approach.
And it's also, I wasn't aware until we started reporting on the potential to lift the Jones Act. What a bad state U.S. shipbuilding is in. We only have like 6 or 7 Navy shipyards, and most of them are here on the East Coast. I think one in California. How are you playing a role in bringing back U.S. shipbuilding, Dino?
You're exactly right. The shipbuilding industry is in crisis right now, and you're seeing this as a priority of the administration. The White House just put out a maritime action plan to rebuild the maritime industrial base, and that's exactly what Seronic is investing in. When you look at the shipbuilding capacity in this country right now from a commercial perspective, the United States has 0.1% of global shipbuilding capacity. The Chinese can outbuild the United States 230 to 1. And then on the military and defense side, traditional naval destroyers, for example, cost billions of dollars, but also take 6 to 8 years to produce one of them. So how we're looking at deploying our unmanned systems is really around scale. How do we adopt very, very fast in really large quantities at a fraction of the price point that traditional manned platforms are able to be delivered to the military today?
What are the biggest benefits of these drone boats? I mean, I look at this administration seemingly begging our allies to come help out in the Strait of Hormuz with minesweepers, because we have only some wooden-hulled boats out there, right? And obviously with a crew that you don't want to risk with such a dangerous task. Is this where you can play a critical role?
That's exactly right. I mean, when you look at what's happening in the Straits of Hormuz and candidly other maritime environments around the world, what you're seeing are increasingly contested and increasingly complex environments. What unmanned systems really bring to the table is scale, persistence, and risk reduction. And what I mean by that is you can really deploy high numbers of these platforms, again, at a fraction of the price point of traditional manned platforms. You can operate them continuously in these dangerous environments while keeping sailors out of harm's way, that really give naval commanders optionality to combat some of these threats that they're seeing that aren't countered very easily with manned platforms alone.
What is, Dino, we hear so much about the defense industrial base and how we're not building enough here, we're not building fast enough here, or efficiently enough. What is the main bottleneck to producing at scale for you?
For us, we really rethink the problem from the ground up. It's really, how do you redesign the ship so that it's designed for manufacturability? We've taken a vertically integrated approach so that we can ensure that we get to the scale that this country needs. And again, that all starts with the design. Once you have the design in place, then the workforce, the training, everything else needed to build out the capacity, and then the software and the autonomy that's required to power these vessels at the scale that we're building them out. This is true maritime autonomy that is vertically integrated and delivered as a cohesive capability to the end user. That's what's required, that's what's needed, that's what we're building at Seronic.
All right, Dino, great to get you on the program. Thanks for joining us. Dino Mavroukas, they're the CEO of Seronic. Coming up, we're going to speak with Will Ahmed, the CEO of Whoop, as its valuation hits more than $10 billion after its latest funding round. This is Bloomberg Tech. Welcome back to Bloomberg Tech. I'm Matt Miller in for Caroline and Ed here in New York City. The war in Iran is felt across Asia, maybe even more so than here. Chip stocks there are tumbling as investors pull back from the market's biggest winners amid geopolitical tensions. You can see SK Hynix and Samsung down 8% and 6% respectively. Meanwhile, SanDisk here in the U.S. is up more than 5% in today's cash session. Memory stocks have been especially volatile, of course, as they are fueled by surging product prices and high demand. But Asia is especially susceptible to the closure of the Strait of Hormuz. Let's switch gears, though, and talk about wearable health tech company Whoop. It's announced it raised $575 million in a Series G funding that values the company at more than $10 billion in total. And here to discuss the latest round is Will Ahmed, the CEO of Whoop. Will, great to have you on. I'm a longtime Whoop wearer. I'm on a 390-day streak right now. And it's nice to see your valuation up to more than $10 billion. That's around the same, I noticed, as Aura. And so I'm wondering what you think about what must be your biggest competitor. I mean, is there room in this space for two powerful companies, or is this, winner-take-all scenario?
Well, thanks for having me on, Matt, and thanks for being a longtime Whoop member. I appreciate that. If I actually just look back over the last decade, because I founded Whoop in 2012, so I've been building this company for 14 years, there's been an enormous number of players in the space over the years. In the early days, you had big wearable or big sports apparel brands, excuse me. So you had the Nike, Under Armour, Adidas, Puma crowd. You then had entries from the tech market. So you had Microsoft and Google and Intel and Amazon, Meta. And so there's been a lot of players, I would say broadly, in the wearable space. Today, there's actually maybe the fewest number of players that I've seen in the last 5 years. And yet the wearables market has grown enormously. When I first started the company, I think less than 5 million wearables were sold a year. Now that figure is 300 to 400 million devices a year and continues to grow. So we're very excited about where the company's positioned, and we think we're still in the early days despite the maturity of the business.
So, I'm obviously a customer, and so many people here around me are customers. Do they stay? Do we stay? Are you retaining customers, those that have 12-month subscriptions? Are they going to 24? Are they renewing?
Well, we recently actually launched 3 membership tiers. So it used to be you could sign up for $240 a year. Now there's a lower plan and a higher plan, $360 a year for Whoop Life. And we've actually seen an overwhelming number of people migrate from our middle tier to our highest tier. And that demonstrates, I think, that our members are willing to pay for enhanced features, premium capabilities, an additional medical sensing portfolio that we've rolled out. So now Whoop has ECG monitoring with AFib detection. We've come out with blood pressure insights, which we're the first wearable to do. We recently launched Advanced Labs, which is blood testing. So overwhelmingly, we see our members wanting to invest more in their health with Whoop. They're buying additional services. They're moving up in their membership tier. And then in addition to that, we have some of the best user engagement in all of health. Our members are opening the Whoop app 8 times a day, which is pretty extraordinary user engagement. We have an 83% DAU-MAU ratio, which I believe is second only to WhatsApp in terms of how often people are using and engaging with the product. So it really speaks to, I think, the value that we've been able to create and the fact that our members are, in fact, improving their health.
I think about all this stuff that you can do, and I see the labs myself as well, and the blood pressure monitoring. You can not predict, but you can see whether you're in line for a stroke or a heart attack. Is this a fitness company, or is it like a clinical diagnostics tool?
Well, we want to build the most powerful personal health platform in the world, and we see that as an evolution from fitness and sports, which is our origins, to now working very broadly across health and medical capabilities. 2 of our investors in this latest financing were Mayo Clinic and Abbott. Mayo Clinic, of course, being one of the best health institutions in the entire world, and we're going to be announcing a lot of research with the Mayo Clinic. And Abbott, of course, being one of the best medical device makers in the world, and we're going to be announcing more with them as well. And so I think this overall financing really shows the past and the history of Whoop with the athletes coming in, Cristiano Ronaldo, Rory McIlroy, and now LeBron James, as well as the future of Whoop with many of these health strategics.
You need to get some squash players. You need to sponsor some squash players here.
Well, we love squash. I've played squash my entire life. Ali Farag, former world #1, is a good friend and a Whoop member, so we'll do more in squash.
You are cash flow positive. I mean, you're making money. So why raise this additional $500 million plus now?
Well, we want to accelerate a lot of the work that we're doing. We think the opportunity to own health monitoring and integrate deeply into the healthcare system is now just completely up for grabs. And there's only a few players in the market, and we really want to attack the opportunity. So we're going to be leaning in on research and development. We've announced that we're hiring 600 roles this year, really across every single function. So we're actually growing our headcount 80%, which seems to be a counter-narrative move right now. And then we're also growing internationally. So we've brought in some really great strategic investors from around the world, sovereign wealth funds like QIA and 2.0 and Mubadala and others. And we're going to be investing heavily in growth around the world.
How can you put AI to work? And I know you already have an AI assistant on your platform. Obviously, I'm on there many times a day. But how much do you think it can be improved?
Well, I think ultimately Whoop will either make you healthier or it will save your life. And those are really the 2 areas of development for Whoop. And as we think about coaching and alerting, those are the 2 areas that we're investing in. And so we do believe that AI sitting on top of all of this data is going to be able to deliver value in those categories. I think it's inevitable that a huge percentage of humanity will be continuously wearing a health monitor. And it's going to make you healthier, or it's going to save your life one day.
Will you go public before that? I mean, I think I read Series G, right? We're getting pretty far along in the alphabet. When is the IPO planned for?
Well, we still see it on a horizon of 18 to 24 months. You know, fortunately, Whoop's operating cash flow positive. We've just added $575 million to our balance sheet. So we've got a very strong balance sheet. And it allows us to be, I think, really thoughtful and control our destiny en route to IPO.
All right. Will, great having you on set. Thanks so much for joining us. Will Ahmed there, the CEO of Whoop. Coming up, NASA gets ready to send astronauts around the moon to eventually prepare for a trip to that big rock. We'll discuss the milestone for the space agency next. This is Bloomberg Tech. NASA is sending astronauts on a journey around the moon for the first time in over 50 years. The lunar mission will test the Artemis 2 spacecraft, paving the way for an actual lunar landing in 2028. Bloomberg Originals takes a look.
I think our generation appreciates having a program that now we get a chance to take our own moonshots, what we call great things that humans accomplish.
NASA's Artemis program is the space agency's ambitious mission to send humans back to the moon for the first time in more than half a century. The last time NASA sent humans to the moon, they were locked in a space race with the Soviet Union. This time, NASA wants to go back to the moon to stay in order to learn how to live sustainably off of the lunar surface.
4-stage engine start.
Prior to Artemis 2, NASA launched the very first major mission in the Artemis program, called Artemis 1, which sent the Orion crew capsule around the moon to demonstrate that they could work without a crew on board. Now it's time to show that they can actually keep a crew alive while traveling to deep space.
Our goal is get to the moon and get back. 4 days out, 4 days back.
We are going to do as much science as we can on the way. And on the far side of the moon, we're going to have maybe 45 minutes where we're in a loss of comm with Earth. And all we can do is just train our eyes on that moon surface.
The entire Artemis program has come under significant criticism for how much time it's taking to build and how much money it's costing the taxpayer. There is an estimate that between 2012 and 2025, the Artemis program has cost roughly $93 billion. Despite the criticism, it does benefit from strong congressional support. Many of the programs that are needed for Artemis are spread across the entire United States and provide a lot of jobs for constituents. While the Artemis 2 mission is coming up, Artemis 3, Artemis 4, Artemis 5 are all a bit of open question marks at the moment. There's development that needs to happen for hardware, notably with the landers that will actually take the humans to the surface of the moon. NASA is pulling out all the stops with its contractors to ensure that a landing occurs no later than 2028, but it remains to be seen if that date will actually be possible.
You can watch the full episode online or on the Bloomberg terminal. And whenever I'm wondering about space, I just watch this show because Ed Ludlow and Lauren Grush know more about going to space than anybody else. Let's talk right now, though, about what to expect from this historic mission tomorrow, what it means for America's broader space ambitions. For that, we're joined by Esne Uzo-Okoro. She is a senior fellow at the Harvard Belfer Center, but also a former NASA executive and a former assistant director for space policy at the White House under the Biden administration. And Esne, thanks so much for joining us. Why do we have to go up there and fly around? I mean, we've already been to the moon. We've already landed on it. Can't we just send another ship up there and go back?
Well, we're a bit rusty when it's been 50 years since you've done something. You need to validate some tests and test some life support systems and test some propulsion and communications and navigations systems before you land again. So that's what this crew will do.
Half a century on, I mean, you know, when we first did this, a computer that could do as much as my iPhone wouldn't even fit in this studio. I mean, we've had such incredible technological advances that it seems to me it should be a lot easier this time, but I'm getting the sense that that's not the case.
That's right. This is a $4 billion proof of concept as part of a larger mission that doesn't have a fiscal architecture that we've seen before. This is the first time the Congress will have to sustain a multi-administration program at this scale for this long. It just happens to be complicated with with multiple vendors and with the technologies that NASA wants to study. As we get more advanced technologies, then the missions become more complex. There are obviously a lot of other cultural and systemic issues that come up with the vision. NASA's vision just changed last week. Rather than putting up a gateway, which is a bit like a space station around the moon, they will be landing on the moon with multiple robotic missions and a lunar base soon. So with changing priorities, that also aids or adds to the complexity.
I have to say $4 billion sounds like a drop in the bucket from a government that spends like $170 billion to fund ICE. But I guess it depends what your priorities are. What do we get in return for that money, Esne? What's the benefit coming out of this program?
There are a plethora of experiments. I do want to highlight one for your audience. There is an avatar organ on a chip investigation aboard Artemis 2. And what it will do is it will measure human response to deep space radiation. And this is a commercial windfall for the pharmaceutical modeling sector, for the biotech R&D sector, and for the space bioeconomy at large. And you can conduct this research without having to land on the moon. So that's one of several experiments that the astronauts will conduct. And we will see a number of gains in a number of sectors, including the space sector. You will have SpaceX and Blue Origin also that are preparing to support the Artemis program. So there are a number of large stakes here.
We're also not above a little healthy competition. Last time it was the U.S. versus the Soviets. Now the Chinese are looking to get to the moon by the end of this decade. How important is that competition? Do we also work together, and who wins?
You know, generationally, there seems to be a seismic shift in space races. You're right, 50 years ago, it was about racing to the moon and who had better technology. But today, with over 50 nations that are signatories to the Artemis Accords, what we're seeing is that countries want to go together. And the question today isn't whether America beats China to the moon, but whether that alliance really holds up. We have a Canadian astronaut, Jeremy Hansen, who's joining 3 U.S. astronauts on this journey, and that's a first for us. And so that alliance is proving to be strong, and we look forward to a strong cooperation as we go together, given the geostrategic environment we're facing today.
Esne, great to get some intel from you. Hope we can get you in the studio here next time you're in New York. Esne Uzo-Okoro there from the Harvard Belfer Center talking to us about the Artemis mission. We'll be following that for you, every second of it, tomorrow. Don't miss it right here on Bloomberg TV and on your Bloomberg terminal as well. Sticking with space, I'm also watching shares of Rocket Lab. You can see they're up right now about 3.5% after yesterday Rocket Lab got the okay on an acquisition. So investors are still looking at these highly volatile stocks as an interesting opportunity, at least on up days like today. Coming up, electric bike startup also has reached a $1 billion valuation. We'll talk to the co-founder and president about the latest fundraise and a new partnership with DoorDash to execute the last mile of delivery. This is Bloomberg Tech. Also is an electric bike and mobility startup that was spun out of the car maker Rivian. It's now reached a $1 billion valuation in its latest funding round. The company raised $200 million and announced a strategic partnership with the delivery firm DoorDash, which is investing. Also, as president and co-founder Chris Yu joins us now. And Chris, you know, we were showing video of some dude ripping up the trails on an electric bike, which is, I'm sure, possible on your product. But I'm getting from the DoorDash connection that your business case is more about last mile delivery. Is that the case?
It's quite broad, yeah. So we were incubated within Rivian for a couple of years, and just a year ago we spun out as Also. An entire thesis that RJ and I had in building Also is around building the world's first vertically integrated and software-defined EV platform that's optimized for small form factors. And that goes for consumer use cases, like the fun experience on our e-bike TMB, which we launched in October, as well as importantly for commercial use cases, because we see that, you know, if you look globally, the vast majority of trips that happen for the movement of people and goods happen in really dense suburban and urban areas where cost per mile and time for deliveries is really important.
So, I mean, first off, just on the bike, because it looks so cool, do you have a clutch in the hub? I mean, how does that work and how much does it cost?
Yeah, our bike has a really fun and novel architecture behind it. So we have our propulsion system that's in-house. It's called Dream Ride, and it's actually pedal by wire. And so when you're pedaling into it, you're pedaling into a generator that gives a really incredible force feedback that simulates the feeling of a bike, but importantly through software allows for really an infinite set of different experiences. And so that architecture is really what underpins our vertically integrated small EV platform that is now going into these other form factors.
So what's the ballpark price for the end consumer?
Yeah, so TMB starts at $3,500 and you can outfit it from there. So it's a really, really highly capable product at that price point.
And I guess, I'm guessing DoorDash will use these as part of your partnership or you'll supply them. Is this a pilot program or is it a more meaningful path to deploy at scale?
Yeah, if I back up for a second, we constructed Also, really, we think of our first phase of our business to address the this massive wave of electrification of the existing small form factors. So if you look at how trips happen today globally, the vast majority happen in things that are smaller than a car, and very few of those things are electric today. And so phase one of Also is building a purpose-built EV platform to accelerate the electrification of these modes. Now, as the world becomes increasingly autonomous, we believe the factors that drive towards small form factors, meaning congestion and cost per mile, still exist. And so one of the key things about our partnership with DoorDash that we're really, really excited about is to deploy autonomous delivery at scale, utilizing these much, much more optimized, smaller form factors for delivery.
See. So it's beyond the DoorDash ideas, beyond electric bikes that a human pedals, and more about autonomous delivery, using bike lanes in urban settings?
Yeah, correct. If you look at our e-bike architecture or our pedal quad architecture, these are highly capable EVs that have really car-like capabilities in some sense, meaning car-like speeds, payloads, range. And if you look at how deliveries happening in relatively dense suburban urban areas, increasingly congestion and the total cost of operation of these vehicles is quite critical and quite important. And so we believe in working with DoorDash that the optimal answer often are vehicles that can traverse the intersection of roadways and road adjacent spaces like bike lanes, shoulders, and curbsides.
All right, Chris, we'll be following along with interest. Thanks so much for joining us. Chris Yu there is the president of Also after raising funding at $1 billion valuation and doing a deal with DoorDash as well. That does it for this edition of Bloomberg Tech. Don't forget to check out our podcast. You can find that on the Bloomberg terminal as well as online on Apple, Spotify, and iHeart. We're looking at a pretty major rally underway today, especially for the tech stocks, with the NASDAQ gaining 1.5% right now at 23,296. The Mag 7 coming back from what has been a loss so far this year, and the SOX index up 2.5% as well. This is Bloomberg.